Hello, good afternoon. You're welcome. Hello, good afternoon. We are welcome.
Thank you.
Oh, okay. Thank you. Once I'm getting the feedback, it means that my voice is clear enough. So, uh, we are not really waiting for anybody again. We are going to start right away. So, um, she keeps moving. Hold on. Let me put the PC in the shape. I'm sure it's doing some updates, so it's slowing things down here.
Now, please, are you
Okay.
talking?
Okay. So I think we are good to go now. Awesome. So we are going to look at the various markets, various assets to see how they are performing. Most specifically, we are going to consider how last week um performed as against what is likely to happen this week. So let's begin from verse 50. Let's begin from verse 50. So we are going to the weekly time frame. I'm using the MT5 platform, which is downloadable on the internet. If you use the web, you are not able to see the weekly time frame. So yes, this has
Sorry,
been, yes,
you said you are using the MT5.
If you
Yeah,
can download from the this thing.
you can download from the internet. Just type MT5 for Windows.
Okay, at the Google session and look for it.
Yes.
Okay, thank you.
And after you download, you have to install it, and then you can have access to the weekly time frame. So
Asibi, Asibi,
for BIS 50, we can see that we have been in an uptrend. You can see this upward slope. We have been in an uptrend on the weekly time frame. And I remember I posted this setup in PFA group where I was looking for a swing buy to take out this high. The unfortunate thing is I was not able to catch the buy from the bottom because of where I was expecting it to be. So we are going to have a look at it. Um, we are going to apply some basic principles as we know to be. Let me remove my entry level so
please,
that.
I see your derived interface or it's from my end.
Oh, okay. Then let me try and share again. Okay,
It's showing now.
great, 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 great. So like I was saying, um, we had a low here, okay, and then we had a high here, and we saw that the high was taken by this green candle, a very strong one, which gives us a break of structure, basic market structure. Once we have a break of structure, this move was an impulse. So after every impulsive move, we look forward to a retracement, which was what we had here. Which was what we had here. Market retraced a bit, tried to push up, but didn't take out this high. And then we saw it push down more into what? This last bearish candle was the target, but it couldn't quite reach in there. So we were expecting price to come here. Okay, so it did. We saw as soon as it touched the order block, this was a valid order block. Why? Because it led to a break of structure. It was able to break that structure and it was unmitigated as well. So price came, touched in. As soon as it touched in, we saw it move further ahead to break this high. So it's a repetition, break of structure, which tells us that we are getting a bullish scenario. So from this low, we had this high. So after every impulse, we have what? A retracement. And actually, I was expecting price to come to this red candle here, which it didn't. It missed it by inches. This was where I was expecting to take the long buy, and that is how come I missed it. So once these candles couldn't get in there, I felt like, oh, equal lows is a very good liquidity zone. So maybe price may sweep the equal low and tap the other block before going up, which it didn't. So I missed the entry from the beginning. And this asset is one of the most stubborn assets. Anytime I find entry, I see myself going down in deep drop down. Sometimes it will just knock me out, and when I'm not observing, it will start moving in my direction. So I decided to forgo it. But in the end, look at where it's going. This high is the target. You see the number of green candles for almost 1, 2, 3, 4, 5, 6, 7. And we are getting 8 weeks. 8 weeks now, price has been bullish. No bearish candle at all on the weekly. So you have no business selling this market if you want to be safe. And the target is to break this high because we are breaking the highs, right? So I want to see that strong move that will break the high. And then after which you expect some retracement. Price can decide to stall here, maybe drop down a bit, and then continue its move. So we have to be on the lookout. But once we are strongly bullish, we can look for a buy move on base 50. So I think that is for base 50. So let's see how we could have taken an entry once price came into the order block at the zone. So from the weekly, you go to your daily time frame. Let me zoom in. And from our daily time frame, we could see that though price couldn't touch in, but we had a shift, market structure shift right there. From here, price was retracing. A low, a high, lower low, lower high, lower low. And as soon as we broke this high on the daily with the candle body, it signaled a market structure shift or change of character, as some people say. You can also use the bottom here. That was the first instance where it happened so that you wouldn't miss the bottom, the top. But this was not too convincing for me. That's why I ignored it. But price also didn't give us a very nice market structure shift. So I missed it from the bottom. So once we were able to take out this, I knew we are bullish. Market has shifted structure. So I was waiting for some deep retracement to maybe some 50% of the range before continuation. And I could see a fair value gap right here. So I was thinking we would retrace into it before buying, but it didn't. And it kept breaking the highs. This high was broken, after which we had a retracement, and then we have broken this high. So perhaps we have traded into a fair value gap. Let's see if that is what is going to cause us to retrace. Then we will join from the bottom and buy up, hoping to take out this high. So that is base 50. Going to H4. Going to H4, we are seeing exactly the same thing. Exactly the same thing. We are bullish. See the bullish move. So you are interested in looking for buy positions. We are bullish. We are bullish, strongly bullish. And then if we decide to mark structure, we see that we had a market structure shift here. Market returned to this order block, and it was able to take out this high. After it took out the high, it retraced a bit to 50% of this range. It went ahead to break this high. And then this order block was not mitigated. So this zone served as liquidity. Price came to take that liquidity, went ahead to break the structure, after which we didn't have any strong pullback again, except for these ones that price decided to do. So we put back into this order block here after taking these equal lows, and after we went ahead to break structure. And we have created liquidities here. Market went ahead to break structure. So we are waiting for that deep retracement. And we are likely to get that this week, or some small retracement for a push to take out this high. So if you see any sell that is a bit stronger, you know that we are coming for a retracement. We can mark this zone out, simple break and retest. Price may come here, or it can even use this one, this high, or any of the zones. Any of the zones. So that is that. Going down to H1, you just keep going down. The reason why you go down is to reduce your risk and find a good entry. The entry that gives you a minimum risk. And you could have It's just the same structure that we see on H1. So once you know you are bullish, you are just looking for a buy position. That is how you trade. That is how you trade. It doesn't mean you can't sell. You can sell. You can sell, but you have to know the overall trend so that any sell becomes just a counter trade or a retracement. So after this end, I'll pause here for questions. And you can like as well also show me what you are also seeing, like what you also think about the whole thing, because maybe you are also seeing differently. Or we can move to the next asset if we are all fine.
Move.
Okay. So 75 1S.
Sometimes, Nana, like
Yes.
the way he said it to do a pullback before it takes a journey. When it's do the pullback, sometimes how do you get to know it's like it's done with what he wants to do, so now I can go in. Sometimes that one side disturbs me a little.
So you have to know where price is likely to pull up to. I mean, retrace to, and you mark that zone down. And mostly, I think I've taught this on my YouTube channel. Somebody have invented the premium and discount tool, or the Fibonacci. So you can use the Fibonacci. Any retracement that comes to the 50% zone or the 61.8 is a good retracement. So around that
But
zone, you'll be
sometimes
watching.
it does it at 38 too.
That is not a very good pullback. So you are very much interested in the 50 and the 61.8 zone. Because normally when it happens at the 38, it is just creating liquidity. It might come back to take that low again into the 50 before going up.
Okay.
Yeah, so for you to be safe, always play around the 50% and the 61.8.
61.8. Okay.
Yeah, it is said that the 61.8 is a golden zone, which means that normally price likes respecting that zone a lot. And
So
around that zone, you have
now,
to find a demand zone or a supply zone, depending on your bias.
so when using a fib, which time frame do you advise we play with?
You can use it on any of the time frames, especially if the daily is going to pull back. It's sometimes it also does the 50% or the 61.8%. But if you are day trading and you are on the 1 hour, you are waiting for retracement, also wait for it around that same zone. For instance, on a higher time frame like the daily, if we take out a major high or low, let's say we were coming this way, we took out the high here, and then price went up, and then started rejecting from here, and you see that it's coming down. From this low to this high, we are looking at the daily time frame, the 1D. So you can pull your fib from this low to this high and allow market to drop from the daily to around the 50% level. And then from here, you look for signs of rejection that it wants to buy. Then you go to the lower time frame and buy up, hoping that you will take out this high and retrace again. So sometimes market does that.
Okay.
We will see the
Thank you.
application. Yes, 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 yes. Let me see if you can have an application here on the daily time frame. Okay, so you can see that from here, we took out this low. Come on. We took out this low. The goal is to take out this low first before we look for retracements. because this is a major low. All these lows are minor. Why? Because they happen within the structure, this high and then this low. So price keeps breaking the minor lows. They are minor, they are minor, they are minor until the external low is taken. So once price is able to break this, then we know a new lower low may be forming. And after which we have to expect some pullback. That is when we will use our fib. You pull our fib from the high to the new low here. And then we look around the 61.8 and the 50% level. And what do we see there? A supply zone, right? So we'll be expecting price to pull up into this zone before continuing the sell again, hoping that this low will be broken. So that is how you use the fib and how you follow. You follow trades. So let's look at 75 1S. 75 1S since last year had been very, very bearish, like you know, but this year we saw a U-turn where price seemed to be retracing. I don't know why when I zoom, the chart collapses like that. So. Let me delete all these things. Good. Okay, so from last year coming, we are on the monthly time frame. You could see that we were coming down. We went up. We came down into this other block. And then we pushed up a bit into this bearish other block as well. And then we tried to pull down, but we couldn't take out this low. So we created equal lows around here. So it's like we are sort of in a range. Price is moving in this fashion. So up until this time, what we have is we are seeing a shooting star, a weak rejection after sweeping this high. So last month's candle, November, closed as a shooting star, telling us that market has no business going up again, according to candlestick anatomy. So after the shooting star, what are we expecting? For price to drop because there has been a weak rejection. So price is likely to drop toward the low side, targeting the low. So we have this low that price will sweep eventually. And then we have this low that price will sweep eventually. And then we have this last low here, which puts in this high. So we are within this range. And once price is not pushed up towards this side, we want to see this as a high, a lower high, and another lower high being formed. So we are most likely, and this is a low. So we are waiting for a lower low to be formed. And we are seeing that weak rejection. So we are bearish overall. And we are hoping that price will come and sweep this low. So you can target this low for a swing sell on base 75 1S. So going down to the weekly time frame from the monthly, we can see strong bearishness. Last weekend there was strongly bearish, and the previous one was strongly bearish, and it was a bearish engulfing candle. You see, the body engulfed 1, 2, 3, 3 candles. All the bodies were swallowed up by this candle's body. And last week, we had another strong bearish candle, and this week has started, and we seem to be pushing up a bit. And it is normal. This is the low we are expecting price to break. So if you see price going up, maybe it is retracing into some supply zone where it will continue to sell. So let's investigate which supply zone may be within this candle so that we watch that zone for continuous sell. So going down to the daily time frame, we can see that we have this nice supply zone here, which we can mark out, or another block, because from here, we saw these three candles being strongly bearish, descending down. So if for nothing at all, price may likely pull back here before we see that continuation. So today, Sunday, maybe you close bullish. Tomorrow, Monday, we may have a bullish continuation. Tuesday, we may have a bullish continuation until we reach this area. And then maybe from Wednesday, Thursday, Friday, you may see some signs of rejection where price may want to continue bearish towards this low here. So this is price objective. That is where it wants to go, but it will not go there straight. Other than that, trading would have been very, very, very easy for everyone. It will keep dancing around, but eventually you know that it must break this low. So from here, it can pull back up, or it can decide to just respect this fair value gap here and then continue selling down to take out the low. So I'll be watching the fair value gap 1, fair value gap 2, and then the supply zone here. Anytime I see the wick rejection on a daily time frame being strong, I'll switch to my lower time frame to look for market structure shift and sell downwards towards taking out this low. So on H4, we are moving from the daily to the H4. On H4, we see our zone there. And if you like, you can refine the zone, but I like leaving the zone like this so that price will not leave me behind. I want to see price come and touch the blue zone, whether the tip or it will enter inside proper, I don't know. Or price may decide not to come there at all. It may just turn from anywhere and continue with the bearish move. So we just watch. We just keep watching. And that'll be it. So on H1, you can see that we just took out this low. We took out this low and gave us a new low. This is a high. And price seems to be pulling back up. So we can use our fib here to see if price is going to turn from anywhere. Then from this high to this low, our 50% and the 61.8 is around this zone. So if price is able to respect this zone, then we are going down. But if it breaks through, then we are most likely to see some more bullish price action. But until this high is broken, we are still bearish. So we want to see on H1, a candle body close above this, break it more convincing. Then we know that market structure has shifted from bearish to bullish on H1, which is to tell us that the daily time frame and the weekly time frame, or the daily time frame, is likely to be going towards this blue area, the supply zone we saw before continuing the down move. So, and that is a 75 oneness for us. And then Almighty V75 is being strongly bullish. It's been strongly bullish. We have 10 minutes to end this session, after which I'll start another one. So we have been strongly bearish, as we know. This low was broken, another low was broken, another low was broken. And now this present month's candle is becoming strongly bullish. We don't know whether it wants to come to this fair value gap or that fair value gap before going down. We don't know as yet, which is likely, but that may not happen within this year. Maybe this candle will close bullish and then January candle will continue. Maybe February will continue till we reach this area before we come down. We don't know yet. So those who are waiting to sell a 75 must also have it at the back of their mind that this scenario can also play out. Another thing that can happen is we can sweep previous month's high. This was last month's high. Price can sweep the high and close back within the range, showing unwillingness to continue going up. In that vein, then we are most likely to see a bearish continuation. So I'll be watching how price behaves after it reaches the high of the previous year on the lower time frames. So I'll mark that out and be watching. If I see that the bullishness is still strong and wants to continue up, then I'll be very mindful to join the buys, and I'll be targeting this high and some of these fair value gap for price to refill before going down again. So let's keep our fingers crossed for that. Going down to our weekly time frame, you can see that last week was strongly bullish. The bullishness was very strong. And we are getting an evening star formation. These three candlestick pattern, candle 1, candle 2, candle 3, was strongly, as it was coming down, the two dojis slowed the selling pressure down. And last week, which ended just today, closed as a strong bullish candle, bullish engulfing. So this is an order block, very valid. So even if price returns down on the weekly time frame into this order block, I'll be mindful to see if it will give us that strong bullish move again. But until then, we are watching. We are watching. Currently, price is going above previous week's high. So we can look at the lower time frame to see if price have any desire to continue being bullish or it wants to just create a market structure shift and then continue selling down. If it continues up, I won't be surprised. The most difficult part of trading is how to know the move has ended and it's making a U-turn and you have to join. So we have this fair value gap also here on the daily time frame. And we have this high as liquidity as well. So who knows, maybe price may target that one as it's going bullish. But if we are going to return from where it is now, then we have this fair value gap here, which will act as support, which may act as support, let me say so. So in case we make a U-turn, I'll be watching how price behaves when it gets here, because as at now, I'm not bullish and I'm not bearish. I'm just waiting for market to tell me what to decide. So that is it. I don't hold a bias on the 75. I only follow price. I will only follow price. So if I get price moving back here, I'll be watching so that I'll maybe join the buy towards this fair value gap. It may also drop to the second one. We have the third one. A lot of gaps left behind. So we don't know when price will be rebalancing, but any move down, I'll be watching those fair value gaps to see how price behaves. So on H4, from the daily back to the H4, I hope I'm not talking to myself. Let me see if they are online. Oh, okay, they are here. Please, are you following?
Yes, we are following.
Okay. So this was last week's move, strongly bullish. So if you are selling this market, excuse me to say, I don't know what is wrong with you. it has not broken market structure to give us bearish signal. So we are not interested in selling. Look at what price did here. It kept on consolidating around the zone. But even with that consolidation, look at how price pulled back into this fair value gap with this week. After sweeping these previous weeks, it closed back, and then the next candles started going up. Took out this high, retraced a bit, and now it's pushing back up again. So it's just not ready to sell now. So you just follow it like that. And you have to avoid this market. This is choppy. This is a consolidation. We are now breaking out of the consolidation. So after a strong move, price moves into consolidation. And whenever you see a consolidation, you will see a chart pattern. You either see a bullish wedge or a bearish wedge. So whenever you see any chart pattern, it means that price is just consolidating or taking some time to breathe before it takes the next direction it wants to go. So yesterday I lost a lot within this range. So I had to finally opt out and leave this asset alone for it to do whatever it wants to do. Later I will join. That if you are not matured enough, you say, "Oh, let me recover. This asset has taken my money. I'll use the same asset to recover my money," and then you'll be in shambles. It has happened to me several. The asset that took my money, I want that same asset to pay me back, and I'll revenge trade them and be smiling at the wrong side of my mouth. So that is it for V75. So we are taking out a high now. We are taking out the highs. This high is being broken, but we have to wait for this candle to close to confirm, because you can decide to close back within the range and not close the body above here. So we are just watching. This is the 4 hours. So let's wait till 4 p.m. We have like 28 minutes more to 4 p.m. That will tell us what to do. So going down to 1 hour, we can see that there is a 1 hour rejection. We are seeing a doji. And if the doji is going to be, oh, somebody is writing on the screen. If the doji is going to prove us right, we took out this high on H1 with the candle body. If you draw it very well, a straight line, you see that the candle body has broken. So even if market decides to come inside there, there's a fair value gap here. I'll be watching, because when price gets here, it may leave a wick here and continue buying. So if I want to join this move, I'll be waiting for price to come to the fair value gap. I'll buy here, put my stop loss a little below it, and then I'll be aiming higher. I'll be aiming higher. So that is how I'll keep following. I'll keep following this particular asset, VACE75. If you have any question, you can ask. If you have any contribution, you can make it. In the absence of any of these things, we can continue to VACE25. All right, so VACE25. At this moment, let me allow somebody to try to do the analysis for us. So who will try for us? Are we using phone or PCs?
Phone or phone.
Oh, okay. So, all right. So let me do it.